Now, for those who don't know about this, don't feel too bad. We'll catch you up, okay? So for one, Quant Papa took this screenshot, and it was originally first published on the 27th of March, 2022. But the key thing for you is this was last updated on September 20th of 2023. Now, getting more into this, you're going to see this little grocery list, if you will. It says firms that have been accepted to the regulatory sandbox, including our previous cohorts. We have received over 600 applicants to the regulatory sandbox since its launch. Applications include, obviously distributed ledger technology, blockchain, right? AI, open banking, and application program interface, API. Some of these ones, DLT, blockchain, AI, API, should all catch your attention. Why is that? Well, remember a while back, roughly a month ago or more, we did that whole thing of, Aladdin, right? That AI with BlackRock. Yes. Do you remember that? What about some of the things we talked about last week in regards to APIs? API everything. Okay. What about AI in itself? Now, obviously, we're talking about, again, back to the whole thing of Aladdin. Now, when we get more into this, you see digital IDs referenced here, data analytics, crypto and DeFi, infrastructure and process innovation, environment, social and governments, ESG. Remember when I mentioned the whole thing of that, like, I think maybe it was last week or 2 weeks ago. Talked about that even in regards to JASMY, right? I think it's an honorable mention. Robo advice sounds crazy. Embedded finance services aimed at facilitating access to finance and reg tech, which in reality doesn't really need to be cited there, but it's there for your own reference. Now, getting into this, let's share or introduce a project you probably never heard of. It's basically Crowdz UK. Now, look what's mentioned here. SMEs invoice financing platform. So what are SMEs? Did you forget what that means on that particular abbreviation acronym? SMEs means small to medium size enterprises. SMEs invoice financing platform using smart contracts on blockchain to tokenize invoices and reroute payments. Now, when I was doing the whole thing with Satoshi, he was educating me on the whole thing about BSV and talking about NFTs, like utility-based NFTs, as in receipts, right, being used, and how that was significant, especially when it comes to BSV. Well, back to what we're talking about in regards to Quant, because we do have this whole thing of, invoices and rerouting payments, basically. There's other ones to be cited here. Sorry, I have my allergies kind of flare up. Turn this off for a second. But the bottom line is I'm going to take you to this, and it is the Crowdz site. Now, what you're going to see here might be something you were never, ever aware of. Now, some of you guys who really follow Quant and so on, you're already aware of this. But look what it says. Auto risk rate assets. Crowdz is the leader in modernizing the traditional trade finance industry by auto risk rating assets at the receivable level. Gain valuable insights to make quick decisions that match your investment strategy. Buy receivables, sell receivables. What is this? Well, here's an example of an invoice, a digital invoice, right? Through, I guess you could say, blockchain, DLT, and so on. This site has been cited from numerous outlets: Entrepreneur, CoinDesk, TechCrunch, Business Insider, and of course, even Finaxtra. Now, why Finaxtra? I think you automatically know where we're going with this. Did a few deep dives in regards to Quant, Finaxtra, very, very significant. 4.38 billion auto risk rated, 533K receivables analyzed, 90 million plus funded and even growing. Now, they have a marketplace, and because you guys know, I always cover a lot of things when it comes to data marketplaces, decentralized data marketplaces, especially with what JASMY is trying to do in the future. But in regards to Crowdz, they are a data-driven marketplace that allows businesses to, of course, upload their receivables for what instant working capital from investors, opening up a new asset class. Now, you've heard Gilbert Verdian talk about, these particular asset classes, and he's done a few interviews about some of this stuff, but each real world receivable is vetted and risk rated through our proprietary technology, which is called SURF. It opens up the asset to, of course, investors, provides a new level of security, flexibility, efficiency for all those involved. You can learn more, but my thing for you guys is just like what says right here on your screen. Why the Crowdz marketplace? Well, data-driven risk score, proprietary algorithmic credit score that leverages powerful data models to optimize for return on investment, mitigate risk. Alternative investment opportunities. Were you aware that they have a 8 to 15% APY from a diversified book of small and medium businesses? Again, your SMEs. So there's all this stuff about reliable, secure settlement, optimization. They give you a breakdown of how this works, and I'll just show you just briefly. All right, I can get really super into it, but it's a marketplace, all right, that brings together SMEs and investors on a receivables platform. Here's an example of how that looks. 21,258 shows you how this is kind of like broken down, how you can easily go on there, and it's not hard to use at all, basically. So you even see some big players on there. Meta, right? Your name, your tech, okay? It's companies that they work with, all right? So you may be wondering, well, where's the real Quant connection? I want to show you this for a second, and then we're going to get really into the juicy stuff here in a second. So for one, take a look at this. Let's jump right into this. Boom, you have what is mentioned on the bottom. Middle quote, plain as day, we are excited to partner with Crowdz so that we can provide their customers with more interoperability and choice. This is a great opportunity for us to demonstrate how valuable interoperability is for the financial services sector, combining interconnecting different blockchains to unlock value. There are huge possibilities for blockchain in trade finance and financial services entities that can leverage Overledger, specifically mentions Overledger, to bring new innovation and products to their customers. Now, again, the part where it says combining and interconnecting different blockchains to unlock value. Gilbert Verdian is always talking about the Internet of Value all the time. So there's that example. Getting more into this, I'll share this with you. Show this tab. Again, shout out to Quant Papa. Takes this screenshot. Why would he take this screenshot? Because in this screenshot it says our team provided, in regards to project outcomes, our team provided the underlying infrastructure and blockchain platform, secure smart contracts, and interoperability of central bank ledgers that form the base of Project Rosalind and a blueprint for any future CBDC. Not some future CBDCs, any future CBDC. Now, getting into this, what is the main thing? I'm not going to read all of this because we already talked about some of this last week. Your main key takeaway should be how it literally just throws it right at you, right in your face. Core API layer. Remember I did that last video on Quant? If you saw it, I talk about how Quant is the core API layer for everything. How so? Well, you have some of this stuff through orchestration, messaging, especially messaging. Talk about ISO 222. Well, when it comes to Quant, it's still technically QNT, even though it's ISO TC 307. It's actually still ISO 222 as well. People forget that. But you do have that messaging layer. And you do see how Rosalind, and look what's highlighted there, the Sandbox, interesting, has all this core API layers to, of course, the Ledger API gateway for transaction signing and responder keys. But you have it all. Signing of the APIs, DLT API. Remember, I don't want to get into all because we did cover this. But over to the service provider layers, Barclays, once again, Amazon, MasterCard, Revolut, BNY Mellon, etc., etc. The reason I want to show you this is because a while back on July 20th of 2023. In this video, you will see an episode of Yahoo Finance's The Crypto Mile. Their host, Brian McGleenan, who spoke to Gilbert Verdian, obviously Quant, in regards to Gilbert Verdian's perspectives on the rise of central bank digital currencies, seeing them as a way to adapt money to suit a progressively digital society and economy, and how he touches basis on this stuff. Now, why am I sharing something with you like this if it was released last summer? Nobody reported on this. Even Gilbert Verdian, Quant Papa looked more into this. It was like an interview that just, for whatever reason, didn't get shared. Why? Did they pull it off? No, not necessarily. Well, why all of a sudden coverage about it now? Because a lot of things have recently happened in regards to specifically the talk of the digital pound, obviously Project Rosalind, and some of these new projects. But look what it says here, how digital pound could benefit just that, the UK. So much talk lately about the UK. I want to play this for you. This is a really, really good interview. If anything, we might play most of it. If you appreciate the Quant coverage, you might want to pay attention to this one. And if anything, put in 720 because that's the most good outbound at the moment. Here we go.
We're joined by Gilbert Verdian, founder of Quant and chair of the UK's National Committee on Blockchain and Distributed Ledger Technologies. Central banks such as the Federal Reserve, the Bank of England, and the People's Bank of China are piloting central bank digital currencies, or CBDCs, their answer to blockchain-based innovations such as Bitcoin and Ethereum. Critics argue CBDCs could increase government surveillance as transactions can be easily traced and also programmed, giving possible control over how, when, and where users spend their money. Today, we'll discuss the development of a digital pound and the potential of CBDCs to transform the financial landscape. Gilbert Verdian, welcome to this week's episode of the Crypto Mile.
Brian, thank you. It's great to be here.
Gilbert, let's begin with, is there a need for CBDCs? Are CBDCs, central bank digital currencies, are they really a solution looking for a problem?
I think we need to evolve money. The current form of money is not purely a digital form of money. It's electronic, and it was invented 30 years ago when we moved to electronic finance and electronic money. So as society, we've become very digital in terms of the way we interact, the way we transact, and having COVID accelerated that adoption to digital. So we think money is not fit for purpose. The current form of money is not fit for purpose. And we should have the opportunity to evolve it to be something that is fit for the future and appropriate for a digital society. So it is a solution that we are looking at. And is it a solution to a problem? I think so, because society is asking for it and business is asking for it.
Yeah, I suppose more and more of life is migrating online, and it's a problem that is significant at the moment, and it will probably become a lot more significant in the future, which is sort of leads to my next question. So the UK Treasury are trying to do something about this with the UK digital pound. Now, what stage is that project at, and when can we see a UK CBDC released?
We've seen a lot of consultation from the Treasury and from the Bank of England on CBDCs, but they've been mainly economic and policy driven to understand what does this mean from an impact perspective to the country? What does it mean for consumers? What does it mean for businesses? And what we're seeing now is the actual implementation and the testing of a real CBDC. And that's the work that we've been involved in with Project Rosalind, with the Bank of England and the BIS, where they've moved away from just the economic and the policy thinking to the practical. What does a CBDC mean for a bank? What does it mean for a consumer? And they were all tested as part of the project, and it is an ongoing project. So the deadline that the Bank of England has set is by the end of the decade, when they decide, or if they decide they want a CBDC, it will be implemented by then. But for the first time, we actually have the opportunity for commercial banks to be ready for CBDCs, to be ready for a new payment infrastructure. And they have a seat at the table. They are actually working alongside regulators and co-designing and co-building this new infrastructure, which they will all be using for the next generation of money as CBDCs.
Would this not mean that there would be a direct CBDC released by the central bank direct to consumers?
It's a new form of money for commercial banks to embed within their core banking systems and offer new forms of product and new forms of payments and new forms of lending, which they couldn't do before with the legacy form of electronic money. So the legacy money that we've been using today is binary. It's a push and a pull, and that's the most it can actually do. But now moving to digital money from blockchain-based technology to CBDCs to tokenized bank deposits, we're able to code logic into money, to automate lots of things, to get it to do new types of payments, new types of lending, new types of products. And the banks are all behind it because it allows them to really innovate. They can offer different types of payment products. They can take a lot of friction out of the system, and they can streamline how business and consumers deal and transact with money in a new way.
Now, there's been a few arguments that this could potentially create more surveillance, more control by the government, and people from certain sectors are saying this could possibly lead to some kind of Orwellian state. What do you think of when you hear these arguments against programmable money?
So the Deputy Governor of the Bank of England actually stated that CBDCs and this new form of money is going to be private but not anonymous. And it's going to be in line with the existing form of regulation, the existing form of compliance that all banks and commercial banks need to do. It's not going to be any different to them, and it's not going to be any different to consumers and to businesses. I guess the concern has been, can the government look at what I'm doing if there is a legal need to? They don't need a CBDC. The government has the powers, the regulation, the laws are there. Law enforcement can ask for data if there is something happening within a suspicious account. That will not change. But what will change is the central bank having the ability to understand the systemic risk in a financial system. By having central bank money, we could actually potentially prevent the global financial crisis that we had in 2008, 2009, because you're able to see and understand the flow and the risk as a whole.
Can you give any real world use cases where programmability could be brought into use?
As businesses and as consumers, we have programmability in the way we use the internet. And that is very unique and useful to us because we're able to automate a whole bunch of things. We can schedule emails, we can put APIs together to say, if something happens, then do Y. Using technologies, internet technologies that we have at our fingertips, we can actually apply that same type of logic to money for the first time by having money become smart and become programmable in a new way. And so what we can do as consumers is potentially remove a lot of friction that we have today. So for example, you're expecting a delivery, you've paid to the supplier, it comes and it's the wrong delivery. And then you have to go and get a refund, send it back. There's a lot of friction, a lot of pain points. But with a programmable type of money, you can actually say, if the delivery arrives on time, it is the right size, it is the right good that I ordered, then release the funds. So you don't have to go and do refunds. Another example is direct debits. Everyone gets their payment from their employer at the end of the month, the middle of the month, and you have direct debits going out. But sometimes it's different when it's processed. So you can't control when your utility goes or your mortgage goes. You can't control which time it goes out. So with programmability, you can actually say, when my salary comes in, take the mortgage and then the utility bills 1 hour after, so you don't get overdrawn and you don't have those issues that people face. So there's a lot of benefit to that.
A lot of these innovations have been, I suppose, developed in the blockchain space. So where do Quant come into this? So how are Quant affecting these developments?
So we're a technology company where we are the infrastructure and the platform to be able to use different types of digital assets, interoperate with different types of blockchain networks, but also integrate very seamlessly for banks, central banks, and institutions into their payment flows, into their banking flows, and into their core banking. So we are the world leading in this space, and we're quite proud of the work that we've done with central banks like the Bank of England and helping shape the future of what digital assets and tokenized money is going to look like.
So if we look at across the world, a lot of central banks are trialing these CBD systems. It looks like of all the industrial nations, China is slightly ahead. If China does get ahead and maybe there's a delay in outputting a digital dollar or digital pound or digital euro, could this affect the hierarchy of dominant currencies in the world?
We don't see the risk of the US dollar not becoming the reserve currency in the near future. there's a lot of initiatives that China is involved in, the Belt and Road Initiative to help streamline how they get paid in renminbi. That is not as big as the reserve currency of the US dollar, and it won't likely be in the near future. Where it goes, it's to be seen, but it's something us as the UK we're aware of, we're looking at. But our position is there could be an opportunity for the UK to be the neutral digital pound that's preferred for digital transactions in the future. There's an opportunity for us to be able to not be involved in the geopolitical debate, but also be innovative and be agile and provide a new form of currency that is preferred for most transactions that are digital.
If we look at where the UK pound is in its pilot and its scheme to become to create a digital pound where the Treasury are at, how far or how ahead are they with the ECB in Europe and with the Federal Reserve?
I think Europe as a whole is quite ahead compared to the US. The US has been a bit distracted, and regulation hasn't been very clear cut for the markets and businesses to understand what do they mean and how do they apply. So I think Europe has been very proactive. We've understood what the potential can do very early on, and we've implemented the right frameworks in place to be able to clearly state this is what a digital asset can do, this is what's regulated, this is what regulation it falls in, and that's given clarity to institutions and to financial services to be able to adopt it in a safe and regulated way. So I think as a whole, we'll see the issuance of a digital euro or digital pound in the next couple of years in pilot and in testing, and then it will go live, if that's the decision, by the end of the decade for consumers and businesses to use.
There seems to be an argument as well, particularly from people in the crypto space, that they're looking at the governments around the world kind of using the innovations from the blockchain space to create their own CBDC projects from scratch. And they point to the likes of public networks like the Ethereum network, and they say, well, why don't they just produce a CBDC and run it on an already robust, tried and tested blockchain, i.e. Ethereum? What would you say to such an argument?
We don't see that likely happening, and the reason being is when you run a payment infrastructure, it's deemed critical national infrastructure. That there has to be resilience, security, confidentiality, integrity, availability, everything built in, because the country relies on that infrastructure, and that's what we've got today. So all the payment institutions are running on 100% available payment infrastructure because the economy depends on it, the country depends on it. So the central bank digital currency infrastructure has to match or be even better than what we've got today. And putting that on public blockchains is not the answer. There are multiple public blockchains out there, but there are multiple limitations of public blockchains. You do not have the ability to fix an issue that happens. It's outside of your control. It's decentralized. It's permissionless. You do not have the ability to 100% trust the security of it. And we've seen time and time again with not properly implemented projects in DeFi and crypto constantly being hacked because they've had a very amateurish view of security, or they haven't programmed to the right level and haven't had the experience to program to the right level the security requirements built into a payment system. The payment systems that we have today have been running at 100% available with no downtime and no security incidents or compromises for the last 10 plus years. So we are going to see the same level of security and resilience built into CBDC networks, because they're going to have the same levels of security controls, the same level of protection that we have today. So it will be unlikely and it'll be very difficult to hack, because it will be pretty much the same infrastructure at the same level of security as today's payment infrastructure.
Going forward, is there going to be a complete migration to CBDCs, or is it going to sort of live alongside cash?
We see a coexistence of cash, electronic money of today, and CBDCs. And there'll be different forms of payments that you use. Some will be the same as it is today, like direct debits, but they could be smart direct debits as a new innovative direct debit that is released by one of the banks. So we're going to see that small transition into a better, smarter way of managing money with the new technology. And eventually they will either match or people will prefer the something that's better for them or gives them more features than what they've got today.
Gilbert Verdian, founder of Quant, thank you so much for coming on this week's episode of the Crypto Mile.
Thank you, Ryan.
Oops, sorry. All right, so that was cool. You know, Crypto Mike Cornwell pointed that out for I don't know, a year and a half or something like that, about these direct debits, or you know, your aunt, grandma, whoever swipes the card, doesn't even know it's tied into crypto. Boom. Gilbert Verdian literally mentioned the same thing, word for word, but same meaning to a sense. We're going to share this next part. It's the last part of the Quant coverage, and it is from Tokenizer, because you guys, I think it was Crypto Mike and Mr. Dinu were sharing this earlier. Let's jump over to this. All right. Let's pull this up. So it talks about the Bank of Korea's further testing of a CBDC, because we're obviously on the topic of CBDCs. Look what Tokenizer has cited here. He says, in October, we got confirmation that Korean won a CBDC would operate on the SATP model. So, you know, Korean won, you know, not like they won something. You get what I'm saying? QNT is building smoothly for the future of finance. So Rosalind, yeah, Project Rosalind, check. Sela, check. Overledger, authorized, check. UK Finance Panel, check. Korean CBDC plus carbon trade, check. Look at this. So on this one, I will blow it up a little bit more if you can see it. You know, it's pretty big for the most part, but you know, you're on a couch and stuff. The date, by the way, October 31st, 2023. Crypto Hulk constantly uses Ledger Insights. Seriously, go to his channel, check it out for yourself. If you don't believe me, all the times he was trying to hide that, it's just from Ledger Insights. I'm not making that up. Anyway, if you go to here, KRX, Korea Exchange, was highlighted. The Bank of Korea plans to create a unified ledger for tokenized asset settlement in the connected outside system by issuing DC3 on the connected outside system and utilizing the asset transfer mechanism. The Bank of Korea intends to carry out tests involving the exchange of assets and central bank money that are issued on separate ledgers, utilizing the asset exchange mechanism. Let me just double check I'm not muted. That'd be horrible. There we go. Talks about the outcomes of these tests. Talks about specifically asset transfer mechanism. Relies on a common smart contract known as the bridge to transfer assets across different networks. A noteworthy example of the asset transfer mechanism is the Secure Asset Transfer Protocol. How many times did we talk about SATP? I think we had Tokenizer on the show. We even talked about some of this. Because that standard, which has been actively researched and developed by the Internet Engineering Task Force, the IETF, it is that specific standard that is particularly well suited for the permission ledgers. Furthermore, one of its features is to have a gateway application through which multiple distinct distributed ledgers are interconnected, specifically architectures and use cases which have already been demonstrated. The point is, if you let that just go over the top of your head, you got to go back to this part. This standard, particularly well suited for permission ledgers. Don't you want it to be well suited? I would hope you do. All right. There's a little bit more about this. There is. Pull that up as well. Yeah, let's pull up this as well. So it's the other side of the screen, my bad. The CBDC will act as a settlement asset for tokenized deposits. At the time, it also mentioned the Bank of International Settlements Unified Ledger concept. I talked about Unified Ledger on the last video. I don't know if you guys remember that. This additionally includes tokenized assets, potentially including carbon credits. on the same infrastructure. As we know with Hedera, that's something that's also referenced on the same infrastructure. Going further down this, look at this quote. The international community, including exchanges in major countries, is also expanding research on distributed ledger technology, and the Korea Exchange is also proactively responding to this international trend, said Korea Exchange Chairman Byung-Do Sun. Through this cooperation, we will lay the backbone of the financial market infrastructure. Further details of the plans will be shared next month. Guys, it's plain as day. The backbone for the financial market infrastructure is through what? What Quant is offering through Overledger. Always has been, always will be. All right. Apologize for getting a little hoarse. Let me pull up this next thing. I think that's almost it. Just double check. Yes, that is it. So bottom line is everything that we shared tonight in regards to all of it in regards to Quant. Talking about some of the things. I mean, you could go back to it yourself, and I would encourage you. Go to Crowdz. Look more into what was mentioned. Why is that so significant? Well, you've already seen some of the examples. Connect the dots even further if you choose to do so.